Thanks to everyone for being here. I'm extraordinarily happy to be able to moderate this conversation with, as Robert said, three of the absolutely preeminent people in Australia on Australia's economic position and Australia's international economic engagement. However, what only some of you know is that these two gentlemen here are very shy, retiring violet types. So I thought what I would do to structure the conversation to bring them out of their shells is to begin by asking Warwick and John to get their very big picture perspectives on where Australia sits in the rapidly changing and dynamic Asia-Pacific area, both economically and geopolitically. And then once they've overcome their natural reticence, I wanted to bring Anna into the conversation to talk about some really important detailed issues, as Robert was alluding to. I think both the Trans-Pacific Partnership and how Australia is thinking, how the FIRB is thinking about foreign investment are clearly critical issues. We managed to be more or less perfectly on time, so I'd like to use the next 20 minutes or so to have a conversation with our distinguished panel, and then to use that as a way to precipitate a broader conversation among everybody in this room. And I'm so pleased that we have such a full room of such a diverse and distinguished audience. So with those as the rules of the game, I sent an email out to the panel earlier this week and asking them what they thought about some topics that we might discuss. And I'm taking the fact that no one replied as strong affirmation that these were the right topics. So let me start, as I said, I'm going to ask John and Warwick, you guys can fight which of you will overcome your diffidence first. When you think about, I'm going to start with just U.S. China because it happens all the time. No matter what the conversation is in the Asia-Pacific, you end up having to address U.S. China, so let's address the elephant in the room first. Where do you both stand on U.S. China? Has the US fallen off a cliff before the fiscal cliff? Is it coming back? Is China going to continue on its 3 decades of extraordinary success? Or is the sort of prediction of the end of the Chinese growth miracle right? And then what about US China? Is it basically about economic codependence or is it about geopolitical rivalry? Let's go the biggest stuff first. Who wants to go first?
Do you want me to kick off? Okay.
All right, John, so we'll twist your arm. You'll be the one to overcome natural shyness first.
Yeah, okay. Maybe, but can I deal with it? Let's talk about US, China views about prospects for growth, then talk about interrelationship, and then maybe the region.
All right.
If I can do it that way. Bullish on US. I actually want to talk about through the prism of demographies, because I actually think demographies are actually a very important part now of what will be driving economic growth for the next couple of decades. I actually am very bullish on the US. Of course, I understand that there's good reason to be alarmed because of the scratchiness and the anxieties that are about, because where we currently sit politically, etc., in the US and the debate that's going on there. But if you look at an underlying issue like demographies, and it's also then useful to look at China through demographies as well. In the US, they're actually on the cusp of a very significant demographic dividend. And people actually forget about this, I think. If you actually look at the most productive age, which can help drive economic growth, it's really that age group of between 18 to 35. And actually think about the structure of the US economy and the demography that underlies that. You've actually got this extraordinary demographic picture coming through, in particular from Americans of Hispanic background. You've got this extraordinary depth emerging around an age group as they come into the most productive years of their life, which will unleash, I think, huge opportunities for the US. So if you actually take that medium-term view, I dismiss completely, mainly because we're in a lunch mode, so we'll say things absolutely, dismiss completely the notion of US decline. I actually think we need to re-understand, or actually rethink about what success will be over the 21st century, and I do think an underpinning here about demography is very important. The other piece, which I think is completely lost in a lot of the discussions which get focused very much in security optics, is what is the source of power in the 21st century? I actually believe, and in many respects my law firm strategy is built on this, so if I'm wrong, the downside risk is huge. It's actually about interconnectedness. It's not about bricks and mortar. It's about interconnectedness, connectivity. Which is the economy in the world which has the greatest capacity to be the most interconnected? Of course, it's the one with the most open system of immigration. It's one where capital seeks out opportunity on a continual basis. It's one which is actually able to use its diaspora most effectively. It's one that's already got soft power connections throughout the world, which will continue to grow. I actually see the US in those terms. So I see a combination of power and economic opportunity, and I am bullish about the prospects for the US through the 21st century. Given that we're at lunch, we may as well just have these grand statements. China, actually, I think one of the pieces about China, looking at the demographic issue, I actually think they are running into a demographic problem. I was speaking last night at a function at my law firm in Melbourne with Ross Garno, and he was describing Chinese economic growth in the future in the context of a developing economy and the particular needs of China as it progresses. I just want to flip and just only talk about the demographic issue. They actually have a demographic challenge in a different way than the US is going to be about absorbing this growth. Theirs is actually one about an age group. And of course, because of the size of the economy, migration doesn't really help in percentage terms. So there's actually a challenge for China from a demographic point of view. And so if you actually start thinking about it, I also think there's a misconstruing of the way in which economic data is assembled and understood by a lot of the observers, particularly from the West. And sometimes the optique from the West is always looking for reasons why China will fail. And if you think a lot of that optique often comes out of the northeast of the US, which is really a security focus on China. So a lot of the debate comes out, there's lots of trails which show you why China will fail. But I think people are actually missing that, and by the way, I'm taking a view that we're looking at 7.5%, moving to 6%, moving to 5% over the next 3 decades. And that, by the way, should be understood in the context of the language now being used by the Chinese leadership. It's about not so much growth, about stability. Stability all the time. And if you think about the big challenges they've got, it's about stability.
Okay,
but,
can I interrupt right there and get Warwick into the conversation?
Which says I spoke too long.
But you I think you made, using the demographics, you made 2 incredibly important points. One, you know, we think so much about US fiscal problems, but we don't think about the fact that the US demographic conditions look much better, for example, than all of Europe or Japan, and that the welfare state is less expensive. And then the second point, China's the first country in the world in world history that will be old before it's rich. But Warwick, you know, you have to you're dealing with both countries all the time. When you think about US China, do you think about geopolitical rivalry first, or do you think about economic codependence first? And do you think it's in balance, or are we still in a massive period of change?
Geoffrey, firstly, thanks for the kind invitation, your very challenging email and your very challenging introduction. I don't think I can do a great deal of justice to everything that you've raised, but I wanted to start with a key point, picking up John's theme on demographics, India and Pakistan, and then I think it's the US in terms of age distribution and growth are the 3 growth economies linked to that population issue, so I'd agree with that. But there's one figure that I think that is my starting point for answering your question. That is that the combined GDP of Asia by the year 2030 on current projections is expected to be $67 trillion, which will be larger than the combined GDP of the US and Europe. So what I argue is that what I call the Asian vertical spread across to India has brought about and will bring about increasingly a major shift in strategic issues and economic issues. When you get to 2030, you will also find that the largest concentration of middle-class consumers will be in this Asian vertical. Now, these issues have profound impact both on the strategic issues and on the economic issues. I don't disagree that there's green shoots in the US economy driven by demographics, and it will continue to be a global player both in strategic terms and economic terms. For me, when I look at the Asian vertical about where the business opportunities are, where the issues that are important for us as a country, both economically, strategically and socially, we need to be focusing on this area, and that will continue in our lifetime and longer to have a profound impact, and how we respond to that is the challenge that we have. We are, I think, at the early stages of understanding what these shifts mean. So economically, we are integrated now. We're going to be increasingly integrated around our economic earnings. If we were to take out the revenues that we earn presently now out of the Asian vertical, we would be far away from being a AAA rated economy with a living standard that we currently enjoy. So we are locked in. In terms of our strategic positioning, and I'm sure we will get to that, there are challenges. We have historical arrangements that we are not intending to move away from. What we need to do is make sure we are not asked to make choices between issues on strategic matters, but we also make sure that we are making decisions that are in our medium-term to long-term interests as a trading nation. We earn our money as a country because we are traders. We don't earn our money because we have friends on the other side of the world. We earn our money, and our lifestyle and our living standards are calibrated against what we can earn and what we can sell. And that is increasingly going to be out of the Asian vertical. What I'm concerned about, that we don't make decisions or choices that put those sorts of issues in jeopardy.
But what about American investment in Australia? You know, we know in Western Australia that Chevron has made this unprecedented, their largest investment ever in the world, the largest foreign investment ever in Australia, $70 billion, 2 gas facilities. It's an American investment in Australia to sell gas into Asia. Kerry Stokes has the Caterpillar franchise, a Chicago-based company doing mining equipment in Australia, but also doing big equipment in China. You emphasise the trade side, but how important is American investment to the Australian economy? And I think the converse is also true, that you know, Australian super funds are always looking for rate of return. They're not finding them domestically. They're increasingly looking at the US as places to invest. How important is the investment side as opposed to the trade side?
The most mobile of commodities in the world, of course, is money, and it won't run uphill for long. It always looks for a return. We have often, and we will continue to be relying on US investment, and we will continue to see substantial European investment, even though there's been some lags in recent times. But the greatest export of China at the current time, and increasingly so, will be its capital. Of the banks, the 5 largest banks in the world by market capitalisation, the first 4 are Chinese banks. So there's a new reality of capital sourcing, and we are seeing it in Australia. That doesn't mean to say that we're going to have any less diminishment of capital requirements out of the US. Now, I chair the private company that owns the Caterpillar franchise here in Western Australia, and also in New South Wales and northeast China, and of course 7 groups in that. When you take together the amount of investment from buying programs, the most successful TV channel, can I do an advertisement?
Absolutely.
Channel
Absolutely,
7.
with some great TV shows on it.
Yes, your wife does really well, by the way. And,
go and see Kath and Kim Durrell.
These issues are important. I don't diminish it. All I'm saying is that capital is mobile, it looks for return. Australia offers return, and that's why it's attractive to people to invest here. That's why we're seeing the Australian dollar where it is. We've got the Azerbaijanis, the Russians and the Swiss in the last 3 weeks investing heavily in the Australian dollar. It's because we're a successful economy, and that's partly because we've aggregated capital from the US, Europe and also China and Japan. Don't forget Japan, and don't forget Korea. So we are a trader. We are a trader where we sell. We are a trader because we actually can invest currencies, or people can invest currencies that underpin and recognise the success of our economy. All I'm saying is we need to be keeping ourselves open to all of those opportunities, both on the trade side and the investment side.
Okay, John, last one for you. Are you worried about US China and where Australia sits, or do you think it's a kind of benign world and we're in a sweet spot rather than an invidious place in the geopolitical
No, thanks, Geoff. Can I just use a couple of things to join all that up and respond quickly? First of all, I just want to join up some stuff I've been working on. So I worked on the task force with the white paper on Australia in the Asian century, and also APEC, because I think it actually comes in. One of the key fundamentals in the white paper is actually, you've got to look at the built assets of this country, and one of them is actually the commitment we've made over many, many years to be an open economy. And one of the interesting things that comes through in the debate around the white paper is this sort of a view that that's a settled view in Australia. It actually isn't. It actually is a view that's subject to contest, and it is one that actually needs to be constantly argued because contexts change all the time. Not everybody endorses the idea that foreign economic investment in this country is a good thing, as of course. And nor does everyone in this country accept that investment from China should be treated on a non-discriminatory basis. There's actually a debate to be had. If I can say this, the white paper actually provides a very useful framework for actually having that discussion and debate. It, of course, proposes that we must, as a matter of course, maintain the settings that surround an open economy, including this issue around economic investment. It also means that we must keep our house in order and continue to reform. Because what worries most of us, I suspect, is that do we actually have consistent and predictable policy settings which actually foresee the future and allow us to move towards it? Are ambitions high enough? And of course, that is something that comes through the white paper. So that's actually an important piece.
Okay, so white paper is very important, but 12 months before the white paper, Barack Obama was in Australia to a rapturous bipartisan reaction in the political class. Is there a tension between the Australia's intensifying geopolitical alliance with the United States and the Asian economic future that's laid out in the white paper?
Yes, I think that there's a correct view, but a view which is open to debate. I actually do not believe that we need to make a choice between being a friend of the US, and I don't think as a consequence of us being a friend of the US that we're automatically an enemy of China. I mean, it might sound simplistic, but there's actually one way of thinking that through. I actually think a fundamental national interest should be to preserve our rejection of ever having to make a choice between the two, and that actually is something that comes through the white paper because it actually talks about the fundamental underpinning. But that is not a settled view in terms of a broad public debate. Again, the white paper provides a very useful framework to work out what trade-offs are we going to require in terms of relationships and values, I might say, as we actually look to the integration and the intermeshing of Australia into the Asia-Pacific economy. The last point I'll just quickly make is, of course, one of the areas that we talk about in Asia, we talk about ourselves trading with Asia. We trade big time in Asia, but we invest poorly. By the way, and that's not unique to Australia. Asia trades well with itself, but actually invests poorly in itself. China trades well with Asia, but invests poorly in Asia. When I say poorly, it's underweight. We're all underweight. So this joining up this piece with APEC, one of the big challenges through the APEC process is to create an environment where we can start getting more confidence in the capital markets as they emerge in the financial services sector, so that we can actually have a much greater flip to investment in the region. That is a very big challenge, but the challenge for growth.
Yeah, and certainly it's got to be one of the themes of the next 10 years.
Just one key point, and I agree with what John's saying. In this issue between the US and China and where do we fit, in this country, the Chinese don't expect, and we should never sacrifice our values. We should never sacrifice our values, and we should never sacrifice our friends. And the Chinese understand that. What I'm saying is, and what sensible people are saying, is that we need to have a much deeper dialogue. We must have much deeper relationships throughout Asia. They will underpin the trading opportunities. They will underpin the investment opportunities. And smart public processes and public forums and political outcomes are needed to be directed towards that end. That's in our national interest. And I think that is what we need to win. We need to win respect. And sometimes I wonder whether or not we are winning respect in some of the decisions we might precipitously make, not aligned to a long-term narrative. White paper, I thought, was actually very, very, very good. It's particularly the piece in the white paper after you enunciate the 5 issues about the pathways, the opportunities and ways in which we can implement. Yeah. They are very, very good. And there's a lot of work in there that I think was put together by some very, very good people, which it has a narrative, a little bit political, and there's no funding to it yet, but it's a very, very good starting point, and now we have to hold the public policy processes to account to see real implementation.
Okay, Anna, let me bring you into the conversation now, because the rubber does have to meet the road somewhere. And just in the last 2 weeks, the Prime Minister endorsed 2 versions of Asia-Pacific Economic Cooperation that have a fundamental difference in them. Version 1, as Claude Barfield described it this morning, was a US-led Trans-Pacific Partnership high-quality free trade agreement for the Asia-Pacific, which wasn't begun by the US, but Obama has taken leadership over, and has a North American bias at the moment because Canada, Mexico and the US are in it, the NAFTA partners. It has Australia in it, but it doesn't have Korea, Japan or China. That's version 1. Version 2, East Asian Summit last week endorsed the CPEA, Comprehensive Economic Partnership for the Asia Pacific. What do we know about that? It's got Australia, it's got Korea, Japan and China, plus the ASEAN 10, plus India. Warwick always wants India in the frame, but it doesn't have the US. Was the Prime Minister smart to endorse both visions of the future and push the decisions into the future? Do you think Australia will ever have to choose between those two versions of the Asia-Pacific century?
I absolutely think that the Prime Minister was very smart endorsing both routes. There is also another route currently being negotiated or at the beginning of negotiations. That's the China-Korea-Japan trade agreement. I also want to step back a minute before DFAT has apoplexy. I am not the government's go-to person on TPP business input. I have made it my business to understand precisely what's happening with the TPP negotiations, but I'm not a negotiator and I'm not privy to the fine detail.
The good news is that gives you a little freedom to be a little more forthcoming with views.
At the APEC Business Advisory Council, business is vitally interested in getting the TPP up, but they are also vitally interested in getting the RCEP up. At the moment, depending on who you talk to, it almost doesn't matter which route or both routes in their own ways get us to free trade within the area. The proof will be in the actual doing. I was interested in hearing from Claude Barfield this morning that his view was that unless the TPP really made great progress within the next 9 to 10 months, it was pretty well all over because of the promises made that they will be, the outcomes will be announced, finalised with a bow around it at APEC next year. Clearly there are negotiations starting to take place. I think it's the 15th round in New Zealand next week. I would think that in fact if they don't make very large headway there on in particular market access things, many of the easy things in the TPP have now been negotiated. The US offensive issues have been well aired. The US defensive issues such as agriculture and textiles have yet to really be touched upon, and whether or not the business side of the TPP as opposed to the security and the geopolitical side of the TPP gets across the line, I still wait to see. In terms of the RCEP, they have a much longer negotiating time frame. They are not planning in this instance to have potentially as comprehensive or deep a trade treaty, but in many respects it might be easier to get across the line because they aren't trying to be so purist. I don't doubt that the ASEAN nations +6 are highly committed to it, but the time frame is much longer. So whether or not a TPP is actually up and running before the RCEP comes out remains to be seen.
Okay, so follow up on specifics, and maybe again per Claude's interventions this morning, the geopolitics of trade. Adrian Hearn, who was in the room this morning, reported, and I certainly people have said this to me as well, that a lot of Chinese officials view the TPP as a US containment strategy of China. As Barack Obama said when he was in Canberra last year, there are certain rules of the road. They're not our rules of the road, i.e. American. They're universal rules, and China can play as long as it's willing to play by our rules. Are you worried that TPP potentially will that a geopolitical negative, that is, that it would be badly received in China, would outweigh any economic benefits from, sort of welfare benefits from the pure economics of Trans-Pacific Partnership?
I'm personally not worried about it, but that could show my naivety on geopolitical issues. I think that the Chinese are also waiting to see what America does or doesn't give up in terms of actually sort of getting a purist, very comprehensive TPP up and running. It's not just America, though. In the TPP are also developing economies that aren't necessarily at exactly the same stage of their development in terms of the services, etc. They would need to sign on to things. America can very openly say, you know, and SOEs are out, not allowed to have them, but America has the Export Credit Corporation and Exim Bank. It's not as black and white as it is.
I think General Motors was a state-owned enterprise, in fact, quite recently.
Indeed. I mean, and Singapore has Temasek and other SOEs. There are many, many hurdles in the last 9 months, supposedly, of the TPP negotiations to be overcome. And my guess is that while China, and I'm not the DFAT person here, but my guess is that while China is observing this, wishing it potentially was a little bit more inclusive or more along the lines of it might want to see happen, is potentially not really fretting about it yet. If the RCEP negotiations will, well, I'll go back a step. If TPPP is dependent on the goodwill and potentially the give and take of the US, even though they have been out in the open saying, you know, whatever is in an FTA with a TPP country is what will stay, we're not going to actually give up anymore. There are many that are hoping that that will not be the case. So the TPP to get up relies on the goodwill of the US. The RCEP to get up, in my view, would rely on sort of China, Japan, India really pushing it along. If they decide to work that way, the TPP may or may not actually integrate. And also, while I'm not au fait with the detail of how it would work, I think that the American announcement last week or the week before on the E3 with ASEAN, where they're trying to get sort of, the way I read it was sort of clear and widen the pipes for trade as opposed to worry about what's going through those pipes. That may also help integrate the two processes.
Okay, so you're optimistic about that. Last question.
Because just on this, by the way, I just noticed there's a whole lot of students here, so welcome to the world of international architecture, TPPs, G20s, ABACs, all this sort of stuff, so it's all about acronyms. I actually am afraid I have to confess myself and out myself as a heretic on TPP. I've always had the view, and I'm incredibly sceptical about it, it was built, in my view, on incredibly shaky foundation, which is what's called, something called the P4. So there's another one for you, which was a market access arrangement between Brunei, Singapore, what was the other player in there? Chile and New Zealand, the two great investing nations. The reason I say that is it was actually always about market access. The TPP, and this is where it actually comes unstuck, is built around market integration issues. It's about how you actually do behind the border reforms. And I think there's a couple of things that come out. First of all, everyone's asked for this whole, completely encompassing, extremely polished agreement. But the fact is, no exceptions, Australia's already announced that we will carve out, we will not agree to a fundamental in there, which is called the investor-state dispute chapter, which is something which is a must-have by the US. Now, if we start saying we're going to carve out, well, why wouldn't others start to talk about carve-outs? Yeah. So you actually find that the actual my view is this is partly historical, and of course I also think the rhetoric around the Trans-Pacific Partnership is completely overwhelming. When Obama announced in Hawaii that it will be completed in 12 months, it reminded me of leaders' pronouncements about the WTO, another one, by the way, World Trade Organization, which has actually been going on since the G20 commenced at leaders meetings in London in 2009. And by the way, we haven't completed the WTO round.
Okay. I'm with you in scepticism about TPP, but I wanted to just bring one other issue onto the stage and then open everything up to the rest of the audience, which is something Warwick's already talked about. So I'm going to put you on the spot, Anna, because you're on the Foreign Investment Review Board. You know, if we look at the biggest deals, bodies like the FIRB or CFIUS in the US, Committee on Foreign Investment in the US, have basically ducked the hardest deals where Chinese investment is concerned. So as you'll remember, I don't think you were on at the time, the FIRB didn't decide that Chinalco couldn't get 20% of Rio.
I wasn't there at the time.
It didn't decide. The deal fell apart for commercial reasons, but the cynics would say, yes, that's exactly right. It was a non-decision because they knew that was what would happen. A few years before that, in 2005 in the US, exactly the same thing happened. I don't know whether you remember this, that CNOOC wanted to buy Unical. and there was an enormous uproar in Congress, and the CFIUS didn't rule on that case. What happened in the end was that Chevron came in over the top and bought Unocal. Warwick and I were just talking about a case that's sitting in Canada at the moment. CNOOC now wants to buy 100% of Nexen, and John and I were in Toronto when that deal broke. Extraordinarily important. The Canadian government's going to have to decide, do you think Australia, the FIRB, is ready to accept a big Chinese takeover of a major Australian asset? Or put differently, what conditions would have to be satisfied for that to happen?
As I said, I wasn't here for the Chinalco deal. FIRB has already accepted big Chinese investment in Australia. There's CITIC in the Pilbara. There's CNOOC along for the Queensland coast for the gas. There's Yancoal in coal. There are three big ones that come.
What percentages? Because I know that the Sinopec deal in Origin ConocoPhillips is about 25%. So minority stake seems to be a more plausible.
Yancoal is over 75. I can't tell you precisely what it is, but it's by country. And Noble is another large investor there, so it's by country mile, foreign owned, and albeit out of China and Hong Kong, but it's very large. And CITIC is with Clive Palmer.
I can't comment because we're involved.
I don't know I don't. They're doing the building. I don't know the percentages. I cannot stress strongly enough that the writing orders we get from the FATA and from the policy documents that we as the board have to assiduously follow, regardless of what the Treasurer then may or may not do in terms of the political overlay, require a national interest test to be applied, and that national interest test is all about Australian growth, all about equity, all about companies paying tax, all about a level playing field. So to the extent that, for example, an SOE, be it from China or from Qatar or from the US, anywhere, the structure of the deal implies that there isn't a level playing field, then we might put conditions on it.
But level playing field means that the foreign firm, a Chinese firm, has a lower cost of capital than the market, or is it a more sort of... Because if that was the test, it'd be pretty hard, in the modern world where government's subsidising a hell of a lot of corporate activity as a way to try to recover from the GFC. There are not a lot of level playing fields out there at the moment. Is that what level playing field means?
On the cost of capital, I'm going to get stuck because I know precisely that many of the Chinese firms being able to borrow internally from their sort of subsidised by the consumer sector banks do get a lower cost of capital than say an Australian firm might. I'm not sure that there would be a huge price differential between a Chinese firm and a US firm that is very large. So to that extent, I think it's a level playing field. But also, I mean, when the FIRB looks at something, there may be, it's an on-balance issue. There may be sort of like a bit of a tweak that isn't entirely market-oriented there, but then you look at all the benefit, and there might be a whole bunch of new jobs and a whole bunch of new investments, etc., etc. There is no perfect world in any investment proposal. It's the same as sort of multinationals coming from anywhere in the world, be it US or Netherlands or otherwise. They, for example, will structure their tax affairs completely legally, but not necessarily leaving exactly the same amount of tax in the Australian marketplace that may have been there had there not been a multinational coming in to take it over. But it's legal. These things are all done on balance, and say on the subject of tax at the moment, the federal government has been looking at sort of the transfer pricing rules. We heard David Bradbury the other day talking about how he wants sort of everybody who operates in Australia to sort of contribute to the Australian infrastructure of legal processes, etc., etc. The national interest test will not per se ever actually stop Chinese or any other government investment on a sort of a blanket ethnic or geographic basis. It just won't do it.
Yeah, and looking at the statistics, it is clear that FIRB has approved lots and lots of Chinese investment in Australia. In terms of volume of transactions, of course, it's mostly real estate and at smaller dollar value, therefore. So when you go higher up the dollar value and you get into controlling interests in large natural resource companies, clearly the political heat goes up. But it is clear that on the aggregate statistics, a lot of Chinese investment has been approved. I hope we've got put some interesting issues on the table. I hope everyone enjoyed their lunch. I'm sure there are some roving mics in the room. Anyone who'd like to ask a question of our panel, could you please raise your hand? Could you also identify yourself before you speak and do everything you can to make your questions as directed and pithy as possible so we can get as much additional stuff on the table as we can. Who'd like to go first? We have a way down in the front here.
Thank you. Richard Kerr from Realm Investments. Just a question about US shale oil and gas. We've been reading about this, and is it a pie in the sky or is it a reality? And if there is a demographic dividend to be paid in the US and there's an energy turbo boost, if you like, to an economy that's been restructured rapidly over the last 5 years, I mean, I'd put it to perhaps the panel that America could literally take off economically.
Okay, so
and how would that challenge the relationship that's widely held that China will be in the ascendancy?
Okay, so can I just put a little context on this because I think it's extraordinarily important. People are starting to note that US has, because of its domestic natural gas market and the boom in gas, US energy costs are below the world market price by a mile now. May or may not be WTO compliant. It turbocharges the US economy. I just saw that the two lead articles in the Atlantic Monthly this month are about the US coming back as a manufacturing power. Are you going to be so bullish on the US, John, that you think that that's true, that there's going to be this re-insourcing based on below world market price energy? And is that going to be allowable into the future, or will the US have to open up its domestic energy market?
But I think one of the pieces underpinning this is the revitalisation of the potential for manufacturing in the US.
Yes.
And what you're seeing there is that choices being made are now finding there's low-cost options because of energy and labour in the US. And there's a number of announcements that have been made recently about the decisions that could have been made in terms of investments in manufacturing between China and the US, which actually have gone to the US because of these sorts of issues. So I remain bullish, but I don't necessarily see this as a zero-sum game in terms of US therefore having the whip hand on China, because, by the way, it's still in our interest for China to continue to grow. And it's still in global interest for China to continue to grow. It actually is in our interest for the incentives which actually attach to growth to be there, because that actually is also an incentivisation which can support some of the security arrangements. The point I should have made or could have made before is, of course, in terms of dealing with emerging power or existing contest, there is no power better experienced in this in the world than the US. The US worked its way through the Cold War period in terms of dealing with, of course it was different because the level of inter-economic engagement between the Soviet Union and the US was minimal, but they actually know how to handle these relationships. We should stop thinking that there's only a meeting between the president and the leader of China by accident. There is a series and multiple sets of discussions on a continuing basis. That doesn't mean accidents won't happen. I think that's fair to say. But that's why it's really important for some of these regional frameworks to emerge in which there's a lot more dialogue about what's going on as well.
Okay, Warwick, let me put you on the spot on this one. Is it fair for the US to have below world market price energy? Should Australia do the same? That's what Andrew Liveris is recommending that Australia do with its energy bounty.
I'll come to Andrew's comments, and I met with him when he was here and also spent time with him in Canberra. But just to answer this gentleman's question, the prospect of the US having an economic advantage by oil shale gas is actually a reality, and it will be very positive for the US economy, and it will be extremely important with offshore oil reliance. Whether the question for us will be whether or not it ultimately leads to export capacity of that oil, shale gas, and there will be, I suspect, limitations. If that gas scenario in the future, if that is exportable into what is my Asian vertical and our market, given that's our fundamental gas market, that will be very interesting for us. I don't believe that will be happening, but it will be something that we need to actually be realistic about. But the first impact will be very, very positive for the US. The reliance on foreign oil has been an Achilles heel of the US economy for a long time. To come to your point, we have export gas that we fix prices for on our contracts, and the argument along Andrew Livis's position is that if we were to actually release some of that gas into the domestic market, we could actually get some uplift economically and also, in a way, support more broadly from the byproduct into a manufacturing sector that would have a growth projection on it, even in an economy this small. I accept that Andrew has a remit as CEO of Dow Chemicals to position around the world to access these products at best price. I don't think yet in public policy terms we've made a determination, but all I would say as a banker, I'm quite happy to lend money to businesses that have a very good market proposition with a long-term view of earnings so they can repay the loans. I'll remain to see what the public policy outcomes are.
Okay, ducked that one. Who'd like to, very deftly I have to say, maybe that's when you're the Minister of Sport you've got to duck and weave, I guess. Have we got the microphone?
Thank you. Tom Pascarella, a question about direct foreign investment and directed about FIRB. Is it FIRB's role, will it be the role to negotiate the deal? And what that means is whatever the perceived negatives or hysteria around foreign investment, is that hysteria around tax leakage, use of foreign labor, bringing in imported products, mining equipment, whatever it is, and for FIRB's role to try to figure out what the negatives are and then to sit and negotiate the deal. Is that how FIRB will start seeing its remit? I know there's an investment banker who's now the chairman, but which is helpful to understand that process. But how do we balance the negatives of foreign investment and the perceived negatives with getting economic growth?
I can say that even under the previous chairman, John Phillips, it was never considered to be FIRB's role to necessarily negotiate the parameters of the deal. Clearly, when there are national interest concerns and a bit of negotiating may help, then we encourage the submitting company to do that. But basically, we think that the ATO should set tax policy, state governments should set land use policy, etc., etc. It's not FIRB's role to be the one that has to determine either of those or competition policy. You need to have the policy settings right at all levels of government, and then we can work within that. And the truth is that we send out all of our, well, in particular the large submissions, to every one of those entities and wait for their response. And if they tick off, then so be it.
Next question.
Francis George. For a long time we've heard about the productivity issues facing Australia, particularly in the global context. I guess what are the 2 or 3 things we must do to improve our domestic productivity?
I think there's a deeper realisation more broadly in Australia that we need to address productivity. If anything, you could say it's flatlined, and we need to lift it to make sure that we're competitive, not just in the Asian geographic vertical, but more broadly. In my view, there are 4 key issues for productivity in this country that have been addressed, but are probably under-addressed, and we need to really put a lot of effort into it, both in public policy terms and in also our businesses, but particularly in public policy terms. The first is infrastructure. We've underspent in infrastructure substantially, and in that is the broadest sense of infrastructure, from ports and rail to social infrastructure. The second is education and skills training. If there is one product that Australia has that is a sustainable product that has an infinite value rather than finite natural resources, it's our intellectual capital. So investment in education and training means for better outcomes. That's the second. The third one is innovation. We have underdone innovation in this country. When we see economies that are highly focused on innovation, we're not talking about total and complete tax breaks, we're talking about a culture of innovation. We're seeing that now emerging in the US. That's why a lot of us think the green shoots are there, besides from the shale gas impacts, but innovation is the third one. And the last one where we are actually now seeing big difficulties emerging for lead investors is, of course, workplace issues and worker participation issues and all that piece about the workplace. Those issues are hugely important. One of the benefits we got from really focused on productivity going back in some years was we were better able to work out our arrangements at the workplace, work out our pricing. Those things are a continuing issue. So they are the 4 issues that we need to be focusing on the community in a broad generic issue. They're picked up in the what I like to call the Asian Century paper rather than the white paper. I don't understand this concession to white papers and green papers. It seems to me a fallback to kind of colonial times. This is the Australian Asian Century paper. That's what it should be called. But they are the 4 issues.
Okay, no coloured paper. Who's got the next question? And the panel's been doing an excellent job of figuring out to whom the questions are asked, but if you do have a specific panellist in mind, please make that person be known.
Good afternoon. Roger Woodward, Chartered Accountant. What is the language of international trade, and how do we communicate with countries like China, India and Indonesia? Thanks.
Now, someone's going to have to interpret the question for me. Have you guys figured out what the language of international trade means?
The language of international trade is English. Is that what you mean? I mean, if you're looking for an interpretation of all the acronyms, go to university, do a PhD, and you might find out. But I don't know, because I can't keep up with it. But the international trade language, the one that we rely on, we follow through the WTO rules, is English. Some of the diplomatic language historically is in French. You go to the United Nations, you will get English and French, and then you'll get other country interpretations on microphones. We do it in English.
But that's actually
and that is, therein lies a huge advantage for Australia.
But it actually raises, if I can just interpret your question in a slightly different way, there's actually some competing views, though, about how you use, get value from some of the terms. We talk about services reform, and there's different views about how that takes place. There is, if I can be really general, there's like a Northern Hemisphere approach and arguably a Southern Hemisphere approach. The Northern Hemisphere approach around a lot of this organisational stuff, and this is, please, simplistic, but for the purposes of not having a cup of coffee while I'm talking, I'll make this point. It's generally characterised by strong institutions, rule of law, organisation, etc., and enforceability. I mean, that's kind of a northern. I mean, that's the EU. Can I contrast that with the Southern Hemisphere view, which is around relatively, less strong institutions, ASEAN versus the EU, relationships and trust rather than formalised agreements as a way of actually achieving outcomes, and less accountability. Both are perfectly legitimate, but often in the trade discussions, the actual outcome is confused by the way in which they're approached. There's actually a cultural familiarity or a language issue or a literacy issue. The reason I say we talk about services negotiations at the moment, but for most economies, when this is the most critical issue in this region is behind the border, like this is structural adjustment changes to actually enable services like financial services to prosper. The idea that there will be a negotiation over something which is an intensely domestic political challenge is actually quite hard. Yeah. This is actually, in many respects, it's where the layer of the southern way is the best way of doing it. The APEC-style approach, which is around voluntarism, around showing capacity building, actually helping people build their capacity so they can undertake services reform within their economies, allowing them, rather than being told what to do by an EU-type body, actually probably has a greater probability for enduring reform in the region. So there's quite different mindsets that can be used. I'm just using your language issue is a window into that discussion.
Yeah, I think those were the two right answers to the language question, but the point that John's raising is clearly an incredibly important one. Now, you're on the B20, the business advisory group for G20. G20 is supposed to be the group where all this is going to be hashed out, where the big rebalancing is going to take place. How do you think it's going?
Well, it's still going, which I suppose is a good thing. I think that many of us were surprised that that the leaders have remained as engaged as they have. We've also been surprised, I think, and I think in a way this is a good thing, that the Chinese have actually found the G20 as a very good process for actually working it through. We've also been, I think, surprised at the way in which the rebalancing, if I can put it this way, of the global architecture, what that means for those of you who don't have to use these terms a lot, is that we now actually have nine nations which are actually, APEC nations involved in the G20. So it's moving out from the G7 to the G8 to the G20 has actually involved lots of new players and actually has given voice to one of the challenges for the 21st century, which is how do you reflect the rebalancing of the global economy in architecture around how we organise ourselves on a global basis. On that level, it's actually working okay. It's actually working okay, but there's so many things that it's not working well on. For example, trade actually isn't really on the agenda, which you might all find bizarre, but it's actually not on the agenda. And there was arguably an attempt by those in the G8 who didn't like the idea of broadening out to the G20 to hang so many things on the G20, it became like a Christmas tree and started shaking, nothing really happened. So you actually find some really weird things end up on the agenda. But that kind of messiness kind of happens in international arrangements and international negotiations. The bit that's interesting is the role the business community plays in it. And that's kind of varied. The involvement of the business community became quite emphatic under the Korean leadership of the G20, where in a little commented upon and probably not really well noticed preamble, a paragraph of the communique or declaration, which I don't blame you for never having read, they explicitly agree as leaders that the G20 should open with discussions with the B20, with the business 20. But there's actually a whole bunch of issues around legitimacy of the B20, who gets invited, why them, sort of stuff, what's the source of authority. So it's actually kind of shaking its way through. And of course, there's no secretariat to support the G20, which is not a bad thing. So it runs through what's called a troika. So you actually have for example, Mexico was the chair this year, now handed on to Russia. So the troika is Korea, Mexico, Russia. They basically want to try and have coordination. And as we've now got into Russia G20 year, the troika is Mexico, Russia, and Australia. One of our challenges, of course, is to get our act together about what is the pathway we want to the Australian G20. And I actually think we've got a bit of work to do on that.
Good. G20 Australia 2014 is in Brisbane, not Sydney. Apparently that was the only city that had the right infrastructure, Warwick, for that, to make that deal work. No comment?
Could have been driven by the candidate to be Secretary General of the G20, Kevin, looking for a job.
But I thought he was.
I don't know who that Kevin would be. Next.
But who's going to be the Secretary of State?
Next question. Is there another question? We've probably got time for maybe one more before we move on to the next session. Will someone recognise Robert Hill with the conch?
Conch. Is Robert the chair?
Well, I was going to, it's a good way to end, I suppose, mentioning that trade is not on the G20 agenda. And listening to the discussion, I was really starting to wonder how important do we really think these various sets of negotiations are in terms of our future prosperity and the prosperity of others. You know, I could ask Warwick, the lack of an Australian-China free trade agreement, has it really inhibited the businesses that you're involved in grow their interests in China and so forth? The fact that you know the GATT has been unable to reach an agreement, and now we go to emphasis. When something doesn't happen, generally something fills its place. So we get the TPC, and now we've got another set of negotiations starting. Are we sort of? Is this process upon process that may be a bit over?
Scrape it all away. The architecture doesn't matter. What do you think?
I'm sure you're wanting a very succinct and pithy response. The great wheel of trade negotiations is always turning, in my view, as long as it's turning always towards the principle of more open and freer trade. I think that's the key thing. The fact that the FTA with China is now in its 7th year of negotiation is somewhat regrettable, but it hasn't inhibited the growth of the trade activity and or the services growth between this economy and that economy. But it could even be bigger on a concluded FTA arrangement, so that's why we commit to it. But my argument would be that all the acronyms that we hear, as long as it's headed towards and moving towards, and we are part of the push which historically we have in a bipartisan way to a freer and more open trade global environment, then that's something that we should be seen to be supporting.
John, you participate in lots of acronyms. Are they just
my initials are
are they just
JWHD.
nice places to visit, people to chat, or is more important stuff happening? You often hear people say it's what happens on the sidelines rather than what happens in the communique that matters. How do you feel? What do you think about that?
But I tend to agree. I tend to agree with Warwick that it's actually good that these discussions are all taking place. But building knowledge and deeper understanding of how business is conducted is actually one of the big challenges anyway we have, and more of that, which is actually one of the elements of the Asian Century paper, about building capability, engagedness, understanding how these different economies operate, the cultural norms, etc. You can get a hell of a lot done just by actually improving capability in those regards. This other stuff is quite important though, because this issue of shifting to market integration in the region is very, very prospective for us. It's also in our interest for this region to continue to grow. So supporting processes that enable that is actually in our interest as well. Making certain some of these economies work their way through the middle income trap is actually a very important issue as well. And that will go to investment in people. It's actually the soft side of investment as well, and capability building, all very, very important. But my last comment is that I never understand why, when we had the celebration of so many years of the common economic relationship with New Zealand, why we as a country didn't demand that they change the rules of origin so we can get our dairy farmers' product through the CER into China. Let's get that done.
Anna, you get the last word. TPP. How important is TPP to Australia's future, or will it just if it happens, great. If it doesn't happen, no problem. Big stakes here, or is it just part of this grand wheel that Warwick was talking about?
I actually, even though it sounded like John and I agree with John's take on TPP. I personally think it's a really great idea. I'm not sure that it's practically going to come to fruition because of all of the things that John's already mentioned, some of them that I've mentioned. I think that the fact that we've got a couple of irons in fires with the RCEP will help enormously, and I don't think it necessarily matters that there's not the same level of comprehensiveness and or depth in the RCEP, so long as we are engaging and with the economies, understanding their systems better. That by itself, just the process, means that trade should improve, so long as there's communication between the negotiators and the business community.
Okay, according to my watch, we are at our witching hour. Would you please join me in thanking our panel for a fascinating discussion?